A very good afternoon. You're watching Markets at Lunch right here on ET Now. I am Ajay Sharma. The markets are doing exactly what Asian sentiment is across the board, a sea of red today. Had it not been for Reliance Industries, which is gaining 10%, its biggest single-day move in almost 10 years, we would have been very sharply in the red on the Nifty as well. There's also big crackdown, good 10% move coming in on some of the auto ancillary stocks as well. Motherson, Bharat Forge, all of them are cracking in trade, and the commentary coming in from the Prime Minister Modi regarding animal spirits, etc., seem not to have gone down very well in the market, and it's the global cues which are weighing on the sentiment. I have a special guest on the show today, Sandeep Jain from IndiaNivesh. He's the portfolio manager at IndiaNivesh. Thank you very much for your time. Good afternoon.
Thank you, Ajay, inviting me for the show.
What is going on in this market, in your view? There was a very big detailed commentary from, if we could equate it from the management of the company. Mr. Modi is clearly the Prime Minister of the country, regarding outlook. But that seemed to have completely got absorbed by the market, no reaction.
I think the situation overall in the market is quite low. It's been going on for the last almost 18 months. We did see this, the small cap and mid cap giving up most of their gains in the last 18 months, and a lot of money was hiding in the large caps. And also in the last 2 months, the large caps have, given up. And every day you've been hearing all of negative news which is floating in the market, has also affected the sentiments overall. Now, what is also escalated was, we did see some kind of a resolution happening on the trade war which was happening between China and US. But the dialogues failed, and the way things have reacted in the last couple of weeks, it is like, it's become more of an ego game with largely a raised bar. Sure. So that has also compounded the problem. And overall, I think out here, the budget proposals which relate to taxation and other issues have also, have damping the market sentiments. So I think this is a time when this is a kind of despair, when typically the policy makers have to come together and act positively. And we did see some action on the ministry front, where they did invite people from the corporate world and also people from the financial markets. They did have discussions, and also over the weekend we did get a Prime Minister's interview, whereby he is committed in unleashing the animal spirit. I think what market is expecting is to see real action. That is where I think market is now looking for the next clue to come from the policy makers.
Right. In fact, the only animal right now in the market which is very growling is the bear, and everybody is quite perturbed that our correction in the market has panned out good, 1.5 year plus. Some are saying probably we are in the last leg of the correction. You've seen correction in the past. Does it appear that we are in the last leg of the correction, because the commentary from the top managements continue to be very bad? And today we saw Mr. Berry of Britannia say that consumers are thinking twice even to buy a packet of 5 rupee packet of biscuits. That was very disappointing. Yeah. How did you analyze the commentary from most managements this quarter?
See, let me tell you one thing. The bear market is not an event. The bottoming out of the market is not an event. It is a process. And if you look at currently the way, for an investor's perspective, I think the starting point is very good. You have a low liquidity and low earnings. So from an investor's point of view, it is a good starting point. Two, valuations have kind of become reasonable, and maybe in some sectors, good entry points are available. Macro is stable. You have very good macro right now. I think oil is down. The interest rates are also moving downside. Monsoon, which was a concern 2 months back, I think has picked up very well. Almost 21 states have received more than normal monsoon, and bearing few regions, pockets where there is deficit. So macro is quite well.
Right.
So for an investor's perspective, I think this is the time when they should start putting their money to work.
Sure.
Though it's very difficult, very hard to say when the turnaround will happen. But this is the time when one should start looking at putting money into the equity markets.
Sure. In fact, there is one stock which is really taking away all the limelight, and that is Reliance Industries. It's seen the biggest single-day surge in almost 11 years. Clearly a big re-rating which is happening as far as Reliance goes after the management commentary on becoming debt-free, the big transaction biggest ever as far as the transaction on Jamnagar refinery is concerned, and also generally value unlocking seemed to be one big area of focus for the management, and there were big upgrades coming in by brokerages also when we opened for trade. Edelweiss has got a 1700 rupee target now. Meanwhile, let's also get in all the thoughts of some big of the analysts, starting with Jal Irani of Edelweiss. We gathered for Reliance Industries.
The verdict there has been demonstrated by the GDRs, which were up at more than 5%, nearly 6% overnight. So needless to say, the market's verdict on that is clear. The fact of the matter is now it's a diversified conglomerate. And the nature of Reliance is that it brings businesses to a certain degree of maturity and then divests out either fully or partially their stake. In the case of the refining and chemicals business is a 20% divestment. But as you would have seen, even in the geo-telecom business, they have fully divested out the fiber and tower business, which essentially was about 1.2 lakh crores on the balance sheet, which is in fact larger than this 1.1 odd lakh crores with Saudi Aramco.
Sandeep, you actually interact with a lot of big HNIs in the market, and you manage a portfolio which is catering mostly to these kind of big HNIs. How's the sentiment among HNIs? An average HNI portfolio, how much has it got shrunk by in the last 1.5 years, and what are they doing? Are they buying more? Are they selling out? Are they folding cards?
So I think you can say the drawdowns are almost as high as 20 to 25% in some cases, small and large cap, small and mid cap, and whereas in large cap, I think in the last last month and couple of weeks, I think we have seen almost 10 to 15% of drawdown. But I think overall, most of the money which in the equity market, which came in January 18 till May 18, so that kind of money has seen a significant drawdown of almost 25 to 30%. So that is the kind of drawdown an investor is setting. And it's not only the investor is losing money not only in the equity but across all asset class. I think these HNIs are invested across all asset class, and across all those asset class they are seeing erosion, or they're seeing negative capital. So the capital has shrunk, and it is a currently it is a kind of state of regret, where they went very aggressively in the equity market, thinking post elections things should improve. So till election we did not see, or we did not hear HNIs moving out of the market. But of late, post budget, there are some. In some places we are seeing redemption coming in. We are seeing investors are not trying to put their money to work. Our advice to investors is, these are the times when you should put your, if at all resources are available, these are the time one should start looking at and putting your money to work.
Right. Sandeep, also talk to us about, are they kind of dipping their feet now in the market? Also, if yes, which are the areas? Corporate banks, or any areas where
so they are looking for they are looking for certain opportunities. Yes, they are looking for certain corporate banks. There are also certain pockets where people are looking at opportunities in the water space, but not many companies are listed in that space, because we heard about the way the government is going. It's like we had house for all by 2022. I think water has become the new mantra, and the commitment of the government is definitely there to, so there are companies in the water infra space or water EPC companies where you can see some momentum. We are also looking at sustained growth also in the specialty chemical space. Largely, there are issues which happened in China on the pollution front, which helped Indian company gain those foothold into that business. Also, certain European buyers who were looking to buy from China are now looking at Indian companies to source their requirements. So I feel specialty chemical is one area, and agrochemical is one area where you can expect sustained upside, largely coming from the China pollution thing. Also, domestic consumption is also going up, and I believe India is catching up in the space. as far as India was not ready to take the benefit of the scale, but I think most of the companies are in the expansion phase, and once that is done, a couple of select companies will move ahead and take the advantage of the situation.
Sandeep, there are Sun Pharma numbers are coming out. Pharma overall is the most crunched place in the entire market, almost 50%. Any thoughts there? Mid-cap pharma is something which you have looked at earlier.
Yeah. So,
does it merit to look there?
So within pharma, I can only say one thing: the risk reward is in favor of pharma companies.
Okay.
We've seen they were already in the correction phase for almost 2 years or 2.5 years. Largely regulatory issues are there, but I largely feel that this is now behind, and the risk reward is in favor of pharma companies. I think so. I would say the pharma companies are what in 2013 real estate companies were. So somewhere there we are in the pharma space. And within the pharma, I think the companies which are focused on the API segment will continue to do well. There are certain good companies which are in that space. One can look at that as another category within the pharma segment.
So please stay with us. Remember, I was talking to you about Britannia's, that scary comment that the demand has gone down so much that even a 5 rupee packet, the customers are thinking twice to buy. Let's hear out the commentary from Britannia management before we take the discussion forward.
Well, if you look at first quarter as well, the first quarter, despite the slowdown that is there in our top line, the fact is that we've gained share like we've never done before. So we've gained almost 1.3 share in this period, which is a huge number. So which reflects on the actual slowdown that's in the market. So we will have to make sure that we continue to do that. Now, if you look at what happened, most companies pulled back on their advertising spends. If you were to analyze the company results, we did not. We said that in tough times like this, if you pull back, then demand could become a genuine issue as we go forward. So we continue to aggressively spend behind advertising and sales promotions, and which is what has given us this huge leg up as far as market share is concerned. Having said that, it's important that the demand comes back. It's not an easy solution from here. I think there are many steps which are required from the corporates as well as from the government to make sure that the demand resurfaces. My own estimate is that it will take anywhere from 6 months to 1.5 years for the demand to come back. So we will have to make sure that we balance what we do during this period. We balance it with the right inputs. At the same time, we take prices wherever the impact of pricing is not going to be large. So yes, hopefully with all that we do, the bottom line should start to become stable.
Welcome back. Still in a conversation with Sandeep Jain right here in our newsroom. Sandeep, though it may be a bad word right now to talk about small caps, there's no appetite, there's no eagerness to research on. But quality mid caps and small caps will eventually bounce back. That has been the trend last couple of years, and this cycle may not be very different. What kind of themes do you have in your portfolio in terms of mid and small caps, which you have taken a 5-7 year view?
So we generally look at companies not from a sector perspective. We look at bottom approach. And largely we have a small cap approach, a small cap strategy. So we look at companies from a bottom approach, and within that we try to look at companies which have financially disciplined, very well managed companies, and largely in our sectors where we see structural upside happening over a period of time. Sometimes we do also look at certain opportunities which emerge because of the environment which changes, like specialty chemical was one area which actually emerged a couple of years back, and that has played very well. So we had a couple of stocks which are doing well, and we continue to hold those stocks in our portfolio. We are also on the consumer discretionary. I think we continue to be bullish, though there has been some consumption which has got punctured. But eventually we have seen so many cycles in the past. I myself have seen 4 ups and 4 downs in the market, and every time the problems are different and situations are different. It's not the same. But one thing I have, in my own experience, one thing I have seen is, we always have this ability to bounce back from all the lows, and as a economy also, I have seen the policy makers and all the ministry, they actually come at such time, and then you get a lot of incentives or positive things which actually then take the market up.
Right. All right, Sandeep, we'll let you go on that one. Thanks so much.
Thank you very much for inviting me.
Great chatting with you.
Thank you.
So that was Sandeep Jain of IndiaNivesh talking about the markets and how they are taking their portfolio. But there's another big interesting development in the market which has happened. Quota